Yeah, welcome to today's episode. I am the billionaire trader. So, in this video, I want to explain the thought process behind these trades. So, let's go to the daily time frame. Okay. Uh, yeah. So, what we want to see on daily time frame is we want to see that price get to. I'm going to explain both the sell and the buy. Price get to. In this case, we have support, resistance key level. Price gets to a particular key level and reject. In this case, it is a resistance key level. And how do I know that it is a resistance key level? Let's change to the line charts. As you can see, we have a high, it does not have a break. So that's why it is a resistance key level. When price got there the first day, it's rejected. This is what we mean by rejection. Price did not close above that particular key level that we mark out. Yeah, this particular week, it is a rejection. Price did not close above it. So that's why it is. Yeah, okay. That is the first thing we want to see. So after having that rejection, yeah, that rejection, we are going to wait for the next day to also go back to the same key level and reject. And when you get there, so we want to see 4 hour sweep and break the next day. So let's go to 4 hours time frame. The this was the first day. So and the next day started from here. Okay, we have the next day here. So we have the next day from this particular area. So the next day when it's got it's also rejected and it gave us 4 hour sweep and break. So let's change to the line charts. This is what we mean by 4 hour sweep and break. We sweep this high, we sweep that high and we broke this particular low. That's what we mean by 4 hour sweep and break. So once we have that, so our entry is likely this extreme key level and our stop loss is the highest high, this particular high here, but it is part of the candle that give us the 4 hour sweep and peak, and boom. So we have the setup. This actually did over 5 hours. Now I thought in my previous video I talked about liquidity, that price needs to take out a particular liquidity. So for this, how where is our liquidity on the 4 hours time frame? We don't actually have the liquidity here, so let's go to 2 hours time frame to see if we can actually spot our liquidity. And one of the ways by which you can actually know that okay, this particular candle is a liquidity is when it does not sweep the high or the low. It's stand as a range candle, but in this case too I can't actually find any liquidity here as well. So let's go to 1 hour time frame. So looking at this 1 hour time frame, we have an engineered liquidity. This I is liquidity. Why is it a liquidity? Let me change to line charts. On our line charts, we have this sweep and we have this break on our line charts on 1 hour time frame. So any other structure after that is just a liquidity. Any other structure after that is just a liquidity. So the eye of this new structure is an engineered liquidity. That's why I said that that's our liquidity. And having that, you see, so this eye is just the liquidity. Then where is the next key level after that eye? This is the next key level. That's the next key level. So our entry is actually here, while our stop loss is just above that particular eye, a little bit above it. Then we still target the final low here. So we have it. This is 10 hour. Before it was 5 hour, now it is 10 hour. So you start from the daily time frame. Once price get to a resistance key level for a sell, the first day the candle rejected. The next day you have price also return back to that key level, and on 4 hours you have your sweep and break. Then you have your trade. Now let me explain the buy. setup. Now go back to daily time frame. Let's change to our line charts. We have a support key level here, a support key level, and let's change to the candle chart. So the first the price actually got there and it's rejected. Price got here, rejected. After that rejection, price also went there the next day and rejected. It did not just rejected, it gave us 4 hour sweep and break. And let me change to the line chart to show you the sweep and break I'm talking about. So we have the sweep and break here of sweep and a break. So we have that break. So having that, where is our entry? Now where is our liquidity? This particular low is an internal range liquidity. It's a liquidity that will be taken out. So you can, because of that, you can use this key level, the shoulder key level as your entry. Your stop loss is just below this particular candle. Yeah, stop loss below here. Then you target the external range liquidity. This is 3 RR, 4 RR. Okay. But if you want to refine further, you can go to let me explain this. In many cases, I've seen something like this. So in case you come across something like this as well too, if you have, look at this 4 hours candle, it swept this low. It is a bullish engulfing. So there is higher probability that price will come and use it as our entry because it is a protected low. So its low is protected. So we have it this way. So from here to the final, to the external liquidity. So that's 6 hour trade. So we start from the daily time frame. Price got to a support key level, rejected. So the next day also returned back to that key level, and on 4 hours time frame, it led to sweep and break. And we use the key level. We have internal range liquidity candle as our liquidity, and we use the extreme key level because it has a sweep, like 4 hours sweep, bullish engulfing, and it deliver 6 hour just on one pair. One app on Friday, the other one app on Monday, and both are profitable. I hope you've learned one or two things today. Thanks for joining me and have a blessed and profitable day.